Gold price is seeing a little bit of a pullback here today, but not really significant as we remained above the psychological level of 1225, and we're kind of hovering right on top of that 100-day moving average right around 1228. So right now gold prices, while they're off their high from Friday, which we saw get as high as 1246, we are seeing a little bit of slowing of the selling, so to speak. We saw some of that on Friday, and today down modestly amount, $5 or $6. Not a huge trade in gold today that we're watching, other than the fact that we stayed above that 1225, hanging in around the 100-day moving average. I think from a technical perspective, we need to see a move and settle below 1225, which should probably then angle us back towards 1212, which right now is still well within the realm of striking distance, but we haven't seen that yet. And since that big move on October 11th, we've only had 2 days where we settled below 1225, and it's really only been by a few cents. So we haven't really seen a significant trade below that level. So we'll continue to watch that line in the sand, we'll call it, at 1225. Secondly, let's look at the dollar. The dollar remains strong here. Dollar's going to add a lot of volatility with it when you talk about trade, when you talk about elections, when you talk about Fed policy, when you talk about G20 meeting, when you talk about the data coming in mixed. So there is a lot of volatility into the dollar, which has been higher today. I think it kept gold from retracing higher, but didn't really play a hand in the trade as much, like it hasn't over the last several trading sessions. We've seen the dollar kind of trade with gold as opposed to against it, and that is something that we've become used to after the big sell-off that began in April when the dollar rallied, a big sell-off in gold in April when the dollar rallied, when they went back to their old historical opposites trade. So lastly, let's look at positioning here. Well, the speculators, which we'll recall not too long ago flipped this thing into becoming spec shorts, are now back long, spec longs. They're in with both feet. We're back to the speculators are as long as they were back in July, but let's not forget in July they were getting out and open interest was declining as the market was plummeting. So right now we're starting to see them build a base. Many may have some longs that were stuck from the early part of last week. We may see them exit here as we come up on some significant data. When we talk about employment, we talk about the midterms, we talk about FOMC. They may look to scale back on some of those longs. So I anticipate longs will go back down, but it's not because of a major shift. It's more about the protection and maybe looking ahead to say maybe there are going to be better buying opportunities. Because as we move forward, the uncertainty of 2019 hasn't diminished. When we talk about Brexit, when we talk about what's happening in Europe, when we talk about what's happening with our own Fed. So there's still a lot of reasons to be long gold here. And I think that any declines in open interest, maybe as those speculators look to loosen up some of their longs, I think it's only temporary. And again, we have to watch that 1225 level in gold pricing.